The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, and thanks to Tommy Jr. for the great wrap-up here of the market, where we are at this time, noon. The Dow's up 33 at 23,381. The S&P is up 4 at 2576. The comp index is up 28 at 6,724. The VIX actually is down 20 cents at 10.21. It's actually way off the lows. We'll be watching that closely. There was a trend reading, but it wasn't high enough for me to expect a sharp move in the S&P futures within 2 days. We might actually have had it already if that was the case, but I didn't get that reading. Someone else did get the high reading. So I'm going with mine based on the TradeStation New York Stock Exchange short-term trading index. That's Richard Arm's actual index, and so we'll be watching it closely. Meantime, S&P futures are up 450 at 2572. I've still got this as a peak F top in the Chapman wave methodology. 2580.75 was the high 3 days ago. Haven't taken that out. If we do take that out, something else is going on. It also improves the weekly chart, which right now is starting to look like it could make a peak if there is a no new high, but a close under 2566 over the next two sessions. We'll be watching that very closely. Got a lot of questions and requests coming in here. So let me get to this. The 120-minute chart just broke the downtrend line. It's struggling there. I think it's more like a rectangle formation, and I'll make it real simple. If you go to the December E-mini, very simply at 2576, it's at 2573 right now. Up 3 points from here. That would be very positive on the session. Down 3 points from here under 2569, and that's going to say, uh-oh, yes, there's a good chance that we have some kind of a topping formation coming in right now. This is, after all, the last day of the month. This is where you expect a lot of buying pressure based on monthly inflows, etc., going into tomorrow and the next day. I haven't quite seen it yet. Okay, so let's go on. We're going to go to the QQQ. I'll go to the S&P in a moment. QQQ hasn't broken above the 152.19 high of yesterday. Today's high is 152.16. 3 cents away, but so far that's still saying chance of a peak E top, not an A, but an E. Right here, MACD is good. Stochastic is not good, and there's a big divergence. Weekly chart is still strong. And the 120-minute chart says peak B could be a peak B minus. We'll see very clear what happens over the coming few hours going into tomorrow. The S&P right now is trading up 2.70 at 2575. The high that was made 3 days ago at 2581, 82.98. Let me put that in. 25, what did I just say? 2580.70. I'll have to check that out. I just said it, but of course it went in one ear. That's exactly right. 0.98. Not right. Not 78, but 98. Okay. Right now we're trading at 2575.80, down 2 points. Whoa, 82. Down 7 points from that high. It's going to be difficult to make that up. All right. All I'm saying is a close below 2563 would be quite negative on the short term. I'm not sure yet what it'll do to the weekly chart, but let's go one step at a time. 2583.70 is very good. 2367 or lower is not good at all. IWM, Russell 2000, trading right now at 149.07. I've got it in a very negative MACD. Stochastic tried to rally, didn't give much of a rally in the price. My suspicion is we're making lower lows and lower highs, and until 149.90 to 150.12 is that resistance is taken out, downtrend line I'm talking about, I think we're chop, chop, chop more towards lower lows and lower highs, even if they're just slightly lower lows and slightly lower highs. That's what I'm looking at. That weekly chart is still really outstanding. So at this particular point, dailies are going to lead. 120-minute chart is actually going to lead, but the daily is really what we're looking at. And the daily is saying that the 9-period exponential moving average has been formidable resistance thus far, and we'll see what happens at the close today. But right there, and where it is right now, 149.10, 149.08 is the 9-period moving average, and we're going to be watching this very closely going into the rest of the day. Let's go to the New York Stock Exchange. I had a question about that. NYA.X. There you are. Under the 9-period moving average for the 1, 2, 3, 4. This is the 5th session. That is a big negative. The MACD is negative. Stochastic is negative. Weekly chart is still very strong. Daily charts are what are going to bring down the market. If there's going to be a pullback, it has to start from the dailies, and it would actually have to be very, very sharp to impact the weekly. So all I'm saying is, on a short-term basis, the upside is becoming quite limited. Downside for many of the indices is starting to open up a little bit to test support. That's really what I can say. And if you go to gold, and the gold right now is trading down 7. There's that 9-period moving average. Gold has not closed above the 9-period moving average since the 16th of October. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 sessions under the 9-period moving average, the black line there in the daily. This is the weekly, this is the monthly. I suggest to you that gold needs more time before it's capable of having a really strong rally. And to go with that, if you look at silver, let me just do silver right now. Silver has a weak chart as well. And if you put it together with high-grade copper is under the 9-period moving average as well. So we're looking at the commodities, this sector of the commodities, not doing all that well. However, if you look at the DXY, which is the dollar index, the dollar index is trading at 94.50, up 4 cents. This is a peak C. I'm not going to give it an alternate count, not yet. At this point, I'm suspecting that it's going to sneak above 95.15. I say sneak because I think it's not going to go all that much higher. 95.15. At 95.16, you start leg D. It attracts the 95.64 200-period exponential moving average. I'm not sure if in this move we're going to get there. And then I think gold might be ready for some kind of a bounce. Doing this one step at a time, we remain long the dollar from the exact day of the low. It was on the 8th of September. And so far, it's acting pretty well. So now let me go to TLT, which is the T-bonds. The 20-year T-bond fund is trading at 124.45. My contention has been, and I don't know if it's going to be right, but my thinking is that if the market is going to have a more severe pullback at any point, and I'm suspecting that the news coming up over the next few days is about the only thing that could do it. It's going to have to be perceived as negative, Fed, whatever it is. I don't care what it is. It's how the market perceives it. If the market perceives it as negative, there's a really good chance that this is the moment that you could start to have a bit of a pullback. I'm saying a bit of a pullback because of those strong weekly charts, but we'll see what happens. In the meantime, back at the ranch, the TLT 124.46. If the TLT spikes into the 125.50s, that's a really good sign to say, hey, bonds are going higher, yields are coming down, and this would be the opportunity for the market to see money flow from equities into the so-called safety of bonds. We'll see what happens. A lot more to do.
It's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced experience and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So crude oil. Thank you, Greg. I thank for pointing it out. I kind of noticed it, and then I just didn't bother to count because usually my eye's very good. I've done it for so many hundreds and hundreds of thousands of charts. But yes, crude oil, in fact, in the continuous contract is in leg D. That was a peak C on the 24th at 52.62, just slightly higher than that peak B. That's all you need. And now you've gone to a D with a doji, long-legged doji candle, still a small candle from yesterday, even smaller one today. The MACD, though, is at 92. The MACD is very strong. The stochastic's at 92%. The on-balance volume is still climbing. So that says to me, until 52.62, 52.50, that area of support is taken out. We could chop around a little bit. But if there is another move to the upside, especially based on the weekly candle in leg D as it stands, my thinking is we're going to see the same thing as we saw in the commodities, in the commodity index, one of the commodity indexes, that the arch formation then became, with the support was so strong on the right side that there was a break to the upside. Let me just show you. DBC, something we own, we're long, it's trading at 15.98. Only a leg C in the daily. This is, and leg E in the weekly went above the target we had of 16.08 in a price time move, left side, right side. Let me just quickly explain that. How can I put that? Now, let's see. I'll put it into the cup and V-shaped formation. See, I think that's chapter 5. Let me just have a look. Okay. No, chapter 15. That's right, chapter 15. I should have remembered that. So in my CD introducing the Chapman Wave methodology, chapter 15 has cup symmetry and the inside wedge, has a really detailed explanation of how you can look at this beautiful gold chart. Look at that cup formation, perfect timing from the left side, 5-year decline to just like 1 month more. No, it was exactly, there it is, exactly to the month on the right side. 5 years down, 5 years up, and it breaks to the upside with the Chapman wave inside track, the green line. So this is what I did for my subscribers. You can get this in a V-shaped pattern as well. So let me just get out of this and I'll show you something very interesting. We had that V-shaped pattern there, and that is the weekly chart, and it broke above. And yet the MACD and stochastic are still very strong. So it's suggesting to me, I don't know if this is kind of tough to do, down at 1598 to suddenly spike to 16.23 for a leg D to the upside. I think it will still do it. But what's really important is that you broke above the left side high in the DB Commodity Index Tracking Fund. It went to a peak A, a B, and then held beautifully the support just under 14. And now trading 1598 has gone above leg B, which went to peak B. Now you've got leg C. So the monthly chart is in a buy mode, is anticipating that there should be a D. So let's go back to what we were looking at, if I can ever remember what it was. How come you don't recognize the count on monthly crude? Oh, well, did I not do that? Give me a second here. Question in the den. Oh, because it's an A. It's there. Look, there it is. Because it's a continuous contract, it always gets smoothed out. I have to make some changes to it because the price overlays it when it gets reconfigured. So the dates are always exactly correct for highs and lows, but the price can change because the price gets smoothed out. So this is the H pattern. They can go to an M pattern. Now with an H with a little M, successful. It didn't break 39.19, the low of the February of 2016. Now it says there's a chance that crude oil could go a little higher. And therefore, although this is a peak D, and I've got to be somewhat careful, the MACD and stochastic are so strong that I'm suspecting there will be another push to the upside, and then we'll probably have to make some decisions. You have a C. This is an A. No, this is just an A. Oh, wait, you have a C where? In the weekly? No, the weekly is A, B, C. This is a D. So that's the way I'm looking at it. The next question was... Okay, so Greg, you were correct. Thank you for helping me. That is a D. I missed that C right there, and I corrected it. In the USO, I believe, I didn't finish notating. It's A. Yeah, it's much clearer. You see, sometimes the ETFs or the ETNs or the trading vehicle becomes a lot clearer, or vice versa. Look, this is A, that's B, that's C, and there's your D. This is United States Oil Fund. Okay, and this is a D in the weekly chart. Yep, looking very nice. And the technicals are still strong. Now let's go to, so I finished all the commodities. I did everything I wanted to do. Okay, next question was, GT says, Compex record on that last day of, on the last day of the month must wait until end of November to short. No. Remember, look, let me just do this. Comp index. Comp index, let me get it right. Compex, there it is. The Comp index is trading at leg F/A. I believe me, I'd like to think that it could be an A. I don't see this. January 2016, October 2016, January 2017. Oh, highs, 51. Oh, you've got higher highs in the crude oil contract, Coda in the den. All right, I'll go back to that in a moment. Let me just finish this. So the Comp index, here's the question. So because it's a leg D in the weekly chart, tomorrow's critical. Let's just say there's just a close today. The Dow closes down 47. The S&P up 3.28 right now, and the Dow is up plus 30. Closes down -5. The index gives back most of the gains. The semiconductor index, really important, gone to all-time highs today. And closes towards the low of the day and open gaps down tomorrow. Why do I say that? Because tomorrow is November the 1st. And that would say that if there were no new highs from today's high all the way through Friday, and then Monday opens with, say, a gap down, all of a sudden you're in place for not just a weekly peak D in the comp index, but the NASDAQ composite index monthly will say, hey, I've now got to make up all this, whatever it is, say 35 points to make a new high. I've got all of November to do it, but if I don't do it in all of November, I've made a peak. So the answer is we always use the daily and the weekly charts to give a sense of the intermediate term turn down. So GT, what I am looking at is that within the context of markets, you have to be looking at the time sequence, and the best is before the end of the week, at the close of a week or the close of a month. You want to see a sharp pullback if you're expecting a peak to be made. And then you want to gap down on that very first opening salvo of the new month so that it's got a lot of points to make up to be able to get there. That's the only opportunity. If tomorrow the comp index, let's go to the QQQ. Most people have the QQQ on their systems. It's easier. If tomorrow there's no push above 152.19, that's the high to beat. That was yesterday's high. But in fact, there's a slide into the 149.70s based on any news, whatever, Fed, whatever it is. There's a chance that you finally are going to make a daily peak that becomes a sell signal to sell mode, a daily sell signal, and then the monthly might be impacted. But it takes a whole month of no new high to make a peak. All right. PK has an AKS got slammed. Yeah, I got a question in here.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So a question here is about the Spider S&P Oil and Gas Exploration. So the XOP, trading at 35.13, up 38 cents. had a peak F top. This looks very much, the IWM was looking like this, but it hasn't had strong candles to the upside. So here you are using lower lows, slightly lower highs with lower lows. You make the Chapman wave falling axe formation. What's the falling axe formation? In my Chapman wave CD methodology book, let's see, the falling axe goes to chapter 24. And what does it say? It says if there's a pattern that starts to make lower lows, lower highs, and much lower lows, at a certain point when it stops doing that and makes higher lows and tries to test the resistance of the declining trend line, this red line, there could be a very sharp move to the upside. Look, here's another one. And then that line becomes a support, and there could be, look at the green lines, a one-to-one expansion to the upside. So looking at this particular pattern of the XOP, and one of the reasons why we are long the DBC, because it has a greater proportion in the oil sector, is because it has the same pattern. So it's looking at this pattern that says, hey, this is very nice, because 34.69 was the high on the 28th of September. If it closes both above that and the 200 period simple moving average of 34.32, of course, if it closes over 34.32, it should go test that high. That's in a single leg 8 to the upside. That's going to suggest that all of a sudden you've raised the support level to 33.32. And so, Julie, that's what I'm looking at. And at the same, oops, that was not a Julie question. That was. Who questioned that? Oh, it doesn't matter. So, oh, that's interesting. All right. Well, the question there is the answer is that you then have to look at the next time frame, which is the weekly, which was horrible until just recently, and now it's made that same falling axe formation off a low. And that says, look at those beautiful lines going down. Look at that expansion. It's like a falling wedge formation, expanding wedge. And then it breaks to the upside. So the week has just begun. I don't even want to talk about it as if it was the end of the week. But if there's a close above 34.69 on the weekly basis, that really improves both the weekly and the monthly. The support now is at 33.31. If it closes under 32.90, I'd say, whoops, this is a single leg A failure mode. But at this particular point, it is a positive. That's that. Now, next question is, Paul wants to know, let's see what he says. The Dow went to a sell signal, the long-awaited correction crashes here. You know, I just don't see crash now. I do see a fairly severe decline if certain things happen, but it has to happen, and you cannot get it until you get the high techs and the techs in general starting to really tumble. They have to close down 2% in the next week before you can really start to see anything to the downside, and you've got to have the bad news. So let me just say that the Dow, yes, we did start a small position on the Dow on the short side yesterday, but as far as I'm concerned, the stop is so tight, I'm not giving it any room. Why? Because if there's going to be a news event, the next few days are really ideal for something like that to happen, and it could be to the upside. But if it's to the downside, I think it's going to be a really quick and a very sharp decline that doesn't have that reflex bounce that you've seen so often. So that's XOP. To go with that, what was another question? Exxon, let's just look at Exxon. ExxonMobil had a spectacular candle, one of the widest candles, a daily candle it's almost ever had on the 27th. That was Friday. It was 84.24 was the high, then 82.01. Over a 2-point intraday swing. Yeah, I don't think it's had that kind of swing before. And now it's filling it in. But I've got it as a G. And that's suggesting that if Exxon takes out 82.90, it's at 83.48 right now. So about $1.50 lower, 82. No, that would be just 50 cents lower. 50 cents lower, then it's going to go and test the wick of Friday, and that's between the open of 83 round number and the low of 82. So that's what I'm looking at. But so far, it's holding the 9-period moving average, and the weekly chart is actually quite good. So let me just get to the next question. So, Paul, I don't see it just yet, but I do see the chance for at least a short-term consolidation, and we just have to go step by step there. Then next thing is Sarah wondering about X. You know, the steels just got hammered. Peak F, remember I spoke about this the other day in the daily chart, and that was at 28.94 on the 24th. U.S. steel trading at 25.11, down $1.35. This looks very poor. It did go to an F in the weekly chart. Now it's going to be consolidating for a little bit. You know, it trades between the 23s, excuse me, the 23s and the 28s. And now I think it's between the 24s and the 26s near term. AKS just got smacked. Down 20%. Oh my. Peak D, look at that. Peak D in the daily. And what do these peak Ds do in the Chapman Wave methodology? That's where you got to be careful. And the weekly just took out the 501 low. It's at 464. Very ugly chart. And that's what's making me nervous. Now I can go to the next question. And I'm about to sneeze, I believe. Yes. So shorting this market has been absolute. This is Kevin. Shorting this market has been absolute suicidal for 9 years. As you've been doing, great picking longs, why try to be smarter than the great bull market ever, Kevin? Kevin, you have a really good point, but I'll explain what I'm looking at. Let me just do this here. The QQQ on Friday spiked up huge. As I'm looking at it, the daily chart says that MACD M formation is either going to start to turn down within 3 bars. Today's the 3rd day after the gap. So it's a gap Friday. The next day is Monday. Goes to a higher high. Today it failed to make a higher high. Day's young. Anything can happen. This is the day that is going to tell, because the stochastic's only at 77%. So if I put in a line right there, dividing line, and I'm going to make this nice and thick. I'm going to go through each one of these indexes because you're not the only person that's asked me the question. And I think it's a very legitimate question. Why bother when you've had really good longs? They're all doing, even the long we just missed yesterday and missed today is up 2.5 points, almost 3 points from where I wanted it just the morning of 3 days ago. So I understand the point exactly, but this is what I'm looking at. You see from the left side, absolutely normal. MACD goes up, comes down, stochastic's holding beautifully in the 97% area, and then plops away and goes down under 60%. Well, on Thursday, I said for my Friday newsletter, I said Thursday's action was very poor. It was. And then suddenly you got this incredible report, Amazon, etc., and you spiral to the upside. I'm looking at this as some kind of a potential blow off top if certain things happen. And now I'm going to put this into context because you can't put it just isolated. The Dow, the S&P won't be able to drag the Qs down if they're still very strong. I'll talk about that when we get Dow's up 24. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back. So Dow's at 26. So let's finish the QQQ to say that if this is an E, we should be pulling back some at this point. Monthly chart is still really strong. So these are trades as far as I'm concerned. Right now you have to think of them as trades. They can develop very quickly into something deeper, but I'll give you the levels at this particular point. The Qs would have to go close under 149, under 149, actually 148.75 to really think that, aha, now we've got at least a short-term daily top. But that's not the point. When I go to the Dow, look at this. You see it's on my other chart. Ooh, okay, let me go to my other chart right here. This is where I show my subscribers every day. So this is the daily chart, and it's got the you see this consolidation here. Let me squeeze it and you can see this. This is without anything other than the 9-period moving average, the 20-period moving average, and the others, yes, the IBM gap, and then the second gap, just most recent gap on the 20th of October. So what I'm looking at here is from this big conglomeration, this cup formation breakout pattern, there was a little mini consolidation at a peak C at 22,490, and it only goes down to 22. It's like, what? Big deal. 200 points. Takes a week and a half, and it's only 200 points. Then you get this peak D. It was there for a day, and it breaks out. And then what happens is it goes to an E, and it's there for a day, and it breaks out, and then it goes to an F. When you get this diamond formation right here, this diamond formation, if it was lower down, if it looked like that, I would say, oh, there's no way I wanted anything other than try to buy a dip, because that pattern with still way above the 9-period moving average and the 20-period moving average, you can break to the upside really quickly. But once you've used up 1, 2, 3, 4, 5 sessions to go sideways, it says, yes, that's a stalling formation, but it says immediately that you're starting to move to the right. When you move to the right, you lose that upside momentum. This is something that probably Dave White could talk about very much more, because it's got mathematical formulas involved. But you're looking at the right side time lapse impacting. So you've got the the vertical move to the upside has slowed its momentum. You're using time to move to the right, but you've not broken a key level, and that's the level of the 23,251. That's number one. If you look at the same chart on the right, except now I've got it with thicker candles, I've got the 7-period simple moving average. No. Yep, simple moving average. And I've got the MACD, which is just about for the very first time to touch the slow. The 9-period differential is about to touch the slow 26-week red moving average. The stochastic is making lower lows, but still at 86%, it's very strong. However, it's all this time it's been declining. In fact, it's been declining since before the top of 23,485, peak F/B. And the unbalanced volume over the last few days has declined quite sharply. And that says to me that the momentum upside is slow. It doesn't say yet, because I like a V-shaped pattern to be an inverted V-shaped pattern, straight up, then straight down, and you got clarity. This is not clarity. This is saying there's a process that's being contrived. And it says that every time there's a pullback, buyers are coming in. So we've got the intermediate term long from the 22,300 level. Some subscribers are still long via the diamonds. We've got other positions, so 5 other positions that are doing really nicely. And we've got the short. We just added a second short this morning. So what we're looking at here is there's a chance that it could happen very suddenly, that 23,300, the 9-period exponential moving average, could be taken out. Until it's taken, and even that's not good enough. Not only has it got to get taken out, 3 things have to happen. You've got to close below. You've got to really take out and close below the low of 23,251, the low of the 25th. And now you've got a channel line that says, no, that's not even good enough. You really have to close below 23,185. But what I've been saying to subscribers is, until we close the down close below 23,170, you've got to consider this is just a short-term digestive phase. But that doesn't mean to say that we can't attempt to be in position for some news events that could be coming up. And with the tiniest stop, really, it's less than 1% I've got. So that's the way I'm looking at it. I shouldn't have spoken there. It is less than 7. Yeah, it's about it's about 1.5%, 1.6% at this particular point. And the opportunity here is to make 1.5 to 2% if correct. And that would be the target of 23,067, 87, the 20-period moving average, if only one of the gaps to the downside is filled. If 2, it'll be deeper. And it's going to be speed. It has to be speed and very negative market comments. All right, so I just wanted to go through that. That's number 1. Number 2 is, if I go to my Chapman Wave pre-programmed support and resistance lines, look, the E-mini has 25.92 way up there as resistance, but the 10-minute chart has a whole chunk at 25.74, 25.76. The 120-minute chart is a whole bunch here at the 25.75, 25.74 resistance area. So that is number 1 on a very shorter-term basis. If I look at the Dow Diamonds, the resistance, the trading at 233.69, way up at 236 is the first daily, but the 10-minute has a whole bunch right here, and they've worked so far at 233.62, and the 120-minute has 234 and 235. That's quite a bit higher, but it's over. There's a lot of overhead resistance. Weekly and monthly charts don't have any overhead resistance. If I look at the SPY, it's the same sort of thing. I don't have to go through them all. Look, way up at 25.9, it's 2 points higher, but look how much. The 10-minute chart, it's working resistance. The 120-minute chart, 257, the high so far today is 257.89, and we've got 257.76. So it's right at resistance, and it pulled back. Nothing, and then 256, what is that, 256.51 in the weekly, and then nothing in the monthly. So I'm going through all of these This is when I like to use this particular technique, most of the time not. But yes, look at the cues. Look how much we've got in resistance right there. And so far today, they haven't made a new all-time high. So that says maybe it's working. So that's the reason why I'm setting it up, because of the speed that could be involved if correct. Now you've got a whole bunch of things. You've got Facebook. You've got coming out Thursday. You've got the Fed. You've got news events that could impact the market positively, or suddenly it's like a rug pull. Suddenly it would be negative. And my bias right now is to say, you know what, I don't mind. Even today we try to go long as well as short. I don't mind having a mixed portfolio. It just doesn't bother me in the least. So let's hold off for the wrap up. We've got a bunch of other questions coming in about the banks, Goldman Sachs. Oh, very good statement here. GT says, why don't you use a different quartet? You know what? I've been thinking that for a little while now. I'll talk about that. Maybe I'll talk about it tomorrow, but I'll do some of the other questions that have come.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Should be a great hour. Then, of course, you've got Dave White, you've got Tom O'Brien again, and then you've got Andy Hecht right at the end of the day. Tuesday today. So let's just go through a couple of things here. A lot of questions came in. Why are you talking 120-minute charts when fund managers are really looking at weekly? No, they're looking at monthly charts. Fund managers, remember, a Fidelity is going to start a position in something they would take 300,000 shares, and over a period of 2 days, they'd give their own personal broker, right there, in-house broker, say, this is what you got to do. I want you to get it within this price range. And they will manipulate and work around up and down, and get rid of those. They'd be buying 300,000 or getting rid of them. But when they're buying, that's not it. This goes on for months. It could be 9 months. It could be even a year that they're getting in increments of hundreds of thousands, sometimes a million over a couple of days. So they're not looking at 120-minute charts. Even the guys, I remember meeting a guy who used to do the buying for one of the big funds at Fidelity, and he would just sit there and he'd say, you know, this is the price I want to get. I'll take all day. I'll take 2 days. I don't want to let anybody know what I'm doing. Of course, people did know, big footsteps, those. But that's what they would do. And so, anyway, we have traders here. I showed 10-minute charts because there are people here that trade very short-term and long-term. So we have a mix. All right. So question to Amazon. Amazon, I've got in leg E, gap up leg E/B. Weekly chart leg E, monthly chart leg D. Fantastic company. At some point, some of this gap will be filled in the 1,040s. That's just the way it is. It's at 1,104. Okay, let me just do this right now. I'm going to just say it one more time, and then I'll say it again tomorrow one more time. I'll just keep saying it one more time. That until the volatility index rallies and holds, it can't spike to 13 and then give it up the same day and then go the next day down to 9s. Until the VIX index starts to trade and hold in the 12s and then the 13s, there will not be a sustained move down. But I think we're getting closer to at least another spike in the VIX index. That's my thinking right now. Perhaps just to watch if the Dow does close down 35 or 40 points. This could say, yep, maybe there's a short-term top, but it's news-related coming up the next few days, and a big spike to the upside today would say, nah, nothing yet.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Hi, folks. This is Tom O'Brien.